I'm Mindo, Chief Operating Officer at Animoca Brands, and you're watching Taking Stock.
Aha, call that a false start. And we're live. Welcome to the show. One and all, the Turkey Trot continues here for the fourth consecutive session. You've heard of the Santa Claus rally, and we may have to coin this the Turkey Trot now for Thanksgiving week. The S&P 500 expected to finish now in higher positive territory for the fourth consecutive session. Now somehow impossibly only 1.2% here off the all-time high. It doesn't really feel that way, but that has been an incredible reversal here starting with last Friday's session here on this special Thanksgiving Eve edition of the Closing Bell at the New York Stock Exchange. And here on the show, welcome to it. You're watching Taking Stock. I'm your host, JD Durkin. Moments away from the ringing of the iconic Closing Bell, a special holiday edition. The team from Salvation Army here to do the honors as they do every year. We've also seen volatility in retreat as we've had the S&P 500 go back up over the last 4 days. 10 of the 11 sectors in the S&P in positive territory. A little bit of fractional selling for healthcare stocks. 4 of the 7 Magnificent 7 mega cap companies in positive territory. We are seeing a bit of downward pressure on shares of Alphabet, down 1%, taking a breather after several weeks of all-time highs. The AI trade on this Wednesday also in focus with Oracle shares today up 4%, 23 of the 30 Dow components in positive territory, and the crypto majors up on this Wednesday as well. We'll talk about all of that and so much more here for the show. But the day before Thanksgiving, the amazing team from Salvation Army, who will be on the show in just a few moments, rings the iconic closing bell. There you have it, the team from Salvation Army bringing about a close to the trading session here on this Thanksgiving Eve. Among the other sectors catching a bid, the major airlines for what is easily their busiest week of the travel year, all up on the day. The banks, oil, energy stocks, the home builders, and the retail giants ahead of Black Friday. The final tail of the tape on this Thanksgiving Eve, the S&P 500 up 0.7, the Dow up 0.6, the NYSE Composite Index 0.75%, and the small caps, the strongest performing of the indexes, up 0.8 on the day. Let's say hello to Hartika Singh. She is economic strategist at Fundstrat for her perspective on the mega caps, the Fed, and so much more. Welcome to the show.
Thanks so much for having me.
It's great to have you. First and foremost, before we kind of dig into to Google and Nvidia, we had a whole bunch of retail earnings, appropriately so, ahead of the Black Friday holiday. What did you see out of the retailers this week?
What we're seeing out of these retail earnings is that the consumer remains really strong despite all the curveballs thrown at it recently with tariffs and job market concerns. And I think with yesterday's after close, we got Best Buy and Urban Outfitters. Urban Outfitters said that they have a positive fourth quarter outlook. Best Buy said that they're giving deals across the spectrum for whenever people are ready to buy. So this is looking really good. This is an encouraging sign for the retail stocks because they have lagged so massively behind the S&P 500 this year. And now I think they're finally playing catch up a little bit, and that's really healthy to see.
Does it surprise you that we're seeing consumer spending, at least right now, as strong as it is, given we know what the soft data tells us, the consumer sentiment surveys tell us people feel a little bit more sour about their economic conditions now and in the future, but sometimes spending doesn't always match the consumer sentiment.
That's true, especially in this K-shaped economy. What we're seeing is that higher and middle income consumers are coming in, stepping in and buying deals, flocking to deals that lower income consumers are kind of paring away from at this moment because that's just how constrained they are. That's what we saw in Walmart and TJX earnings, the parent company of TJ Maxx. And I think that's the most important thing right now, seeing where this higher and middle income consumer can continue to be healthy because they're the ones leading this economy right now. And it's very muddy, like you said, economic data seems to be all over the place, especially with this morning's initial jobless claims that we saw. It made the case for the Fed to potentially not cut rates, and sometimes investors don't like that. But then you take a step back and then you think about the data that we received yesterday, and it's also all over the place. So you're kind of like, man, how do I make a sense of this? So I think we haven't really received conclusive data that says the Fed should go in this direction or another.
Yeah, I'm glad you mentioned TJX. Everyone who watches the show knows I'm proudly a Maxinista. We love to see what happens with the retailers. Let me get your take on what's going on between Google and NVIDIA. It seemed to me this week as if the market said there can only be one. There's suddenly a bit of a proxy battle, even though Alphabet is one of NVIDIA's largest customers.
Yeah.
Bit of a breather for Alphabet shares today, but that all-time high story, really been an incredible one here the last week or two.
It's almost like they're playing musical chairs right
Yeah.
now, right? Like it's my turn now, it's my turn, and who's gonna come out on top? The game isn't over yet. I think the most important part with this little bit of breather that we've seen today is that Alphabet's TPUs are great, but at the end of the day, they're built for very specific custom tasks, whereas NVIDIA's GPUs, you can use them for just about everything. They're very versatile, and I think at the end of the day, the progress that we want to achieve with AI, that's going to be built likely on GPUs by NVIDIA versus TPUs by Alphabet. And yes, Alphabet's been very, very hot this year. It's been on a roll, right? It's been inching closer and closer to that 4 trillion mark here. And I think that's the next thing we need to watch, see if it can finally catch up to NVIDIA's level.
Yeah, are you surprised that the chatter around Gemini 3 has been as optimistic as it has? We were chatting about this with Phil Rosen yesterday, that Mark Benioff at Salesforce said, essentially, I've been using ChatGPT for years, played around with Gemini 3 for a couple of hours, and it blew me away in terms of direct head-to-head competition.
I mean, I used it, and I've actually been I'm kind of a rarity. I don't use ChatGPT as much as I do Gemini because I write a lot for my job, and I use Gemini more. And I think the best part about Gemini is that you can see people are very quick to transition. That's healthy to see in this market because you don't want people to just latch onto one product, even if it's not good, right? It shows that investors are still behaving in a very rational way, and I think that's healthy to see in this market overall.
Yeah, absolutely. All right, Hartika Singh is an economic strategist at Fundstrat, making her debut on Taking Stock. We'll do it again soon. All the best for Thanksgiving.
Thank you.
Thank you for being here. It's great to have you. Dean will grab your microphone in just a bit. But first, folks, before we move on with the broadcast, we'll bring you a recent interview from FinTech TV's very own Remy Blair at Money 2020 USA in Las Vegas, Nevada. Take a look.
Welcome to NYSE Floor Talk. I'm Remy Blair. We're coming to you from Las Vegas, Nevada, where Money 2020 USA is underway. And today I am joined by Max Neukohen, who is the global co-head of JP Morgan Payments. Max, great to have you here. Thank you so much for joining me.
Thanks for having me. Great to be here with you.
Well, of course, you are coming off a record third quarter. So tell us what's behind the success and what factors are driving the business right now.
We indeed had a great run this year with our business. It's ultimately the result of years and investment and focus on our customer needs. And we've seen good growth across all regions and industries, and we look forward to seeing that continue.
And when we talk about an event like Money 2020 in particular, we know that it can be a sneak peek into the future of payments. So what do you expect to see, and what have you been noticing on the floor this year?
Two topics that definitely stood out for me this year at Money 2020 are, number one, anything around digital currencies, digital assets, and number two, anything around AI, agentic commerce, and how AI can transform payments. And these are also two topics that we feature very prominently in our presence here at Money 2020.
And with JP Morgan very prominent on the floor, we noticed that there's even a biometric juice bar as well. So panels as well as demos. What do you want people to take away from this year?
JP Morgan is very focused on innovation in payments. And we really look to innovate the payments landscape to help our clients better. You mentioned the biometrics use case, which is a great experience to make shopping easier. You just register once with your payment credentials and with your smile, and then you can go to any merchant, including here, and buy a juice, buy a hot dog, or just buy a pair of shoes. So it's a great example of how we bring innovation to the consumers and to the merchants to improve their payments experience.
Yes, and speaking of innovation, Max, you've been attending Money 2020 for many years. So what feels different to you this year compared to other years, especially when we're talking about the direction as well as some of the conversations that are taking place?
This year there's definitely a big focus on digital currency and digital payments. We have also launched our tokenized deposit solutions that allows treasurers to really use the new technology to move money truly 24/7, 365, basically around the year, and to make it also much more easy to do money management by using the new technology. So that has been a big focus area. And then of course AI, which we use both to build solutions for our clients to help them manage their payments better, but also internally to become more efficient with customer service, with payment operations, as well as with our technology.
Well, Max, it was a pleasure speaking to you here at Money 2020 USA. So thank you so much for joining me, and thank you for your insights and your perspective.
Thanks for having me.
Welcome back to the broadcast. You're watching Taking Stock on this Thanksgiving Eve, live from the trading floor of the New York Stock Exchange. Joining me now here for a one-on-one interview, longtime friend of ours, Sarah Foster, economic analyst at Bankrate. Give us a sense on pricing pressures for the consumer for the holiday season. Great to have you.
Great to be here. Thanks for having me in person.
First and foremost, I'm seeing a lot of chatter in financial media, and a lot of consumers want to know, how much is my turkey going to cost? How much is my Thanksgiving meal going to cost relative to previous years? What is the data telling us right now, Sarah?
It's the big question. You know, it really depends on where you live. It also depends on who you ask. We saw reports from Wells Fargo that actually saw that turkey inflation, you know, that Thanksgiving inflation is actually down a little bit. Deloitte says it's flat. I personally like to look at the CPI figures. We have that from September. Turkey prices are a little bit better this year, of course, though that's after increasing in 2022 and 2023 by an astronomical amount. Ham prices are a little bit better. Also the sides, though, that's where it's going to cost you a little bit more in the desserts, so keep an eye out for that.
That's horrible news for people with a sweet tooth like me, because desserts are my favorite part of the Thanksgiving meal. You mentioned CPI print. It's been tough to come across reliable government data as of late. PPI, PCE, CPI, it's been a while since we've had that because of the government shutdown. Does that make pricing where things are that much more difficult, given that usually we have that a bit more information into the holiday? This year it's tough to come by.
It's extraordinarily difficult. You know, I've been talking with a lot of business owners for the past few months about how they're handling the holiday season, how they're thinking about inventories, how they're passing along higher costs from tariffs. A lot of them are actually taking a portfolio approach. You know, they're tweaking prices on those goods where they think they can sell still, not raising prices, though, on the items that they think demand is a little bit more sensitive on. You know, I'm mindful that this week many Americans are spending money on their turkeys, their, you know, Thanksgiving dinners, but they're also maybe going to do a little bit of holiday shopping. We also see more broadly that 78% of those holiday essentials are more expensive this year, with gifts really increasing too.
Yeah, we also track the oil benchmarks very closely. For the most part, it's been a pretty positive tale for energy stocks so far this year. We've seen a nice decline in gas prices. What does that mean for the millions of Americans who invariably are going to, you know, hit the roads, they're going to fill up their gas tank and maybe see the price of gas and say, hey, maybe I could afford to drive a few extra miles to grandma's house than I would otherwise?
You know, prices are very salient to many Americans, especially when we hear that they're comparing prices to what they were before the pandemic. And slowing inflation is not really much of a medicine for people who still see that, broadly speaking, prices are up about 25% since the beginning of the pandemic. We see souring consumer sentiment, of course, in the data that came out this week from the Conference Board, which kind of verified what we saw in University of Michigan. It's really that K-shaped economy, though, and if there's really any time that consumers really look past their frustrations, it's the holidays. So National Retail Federation and we are also anticipating a pretty solid holiday shopping season.
Yeah, we were just talking about this with Hardika, saying in the first block from Fundstrat about consumer sentiment, where it is oftentimes a bit of a difference between how consumers say they feel about the economy versus the way they spend money. Is that kind of your expectation, that mismatch to continue? I feel like you got a lot of people out there maybe faced pricing pressures all year because they wanted to save up money for a big Q4 pricey buys.
Yeah, you know, it's really that beginning of the year where we might start to see consumers pull back here. I even hear a lot of worries about the job market. You know, the highest share of workers in our survey from the pay raise survey that we do every year didn't actually get a pay increase, and that's happening at a time when their wages are actually not keeping pace with, you total post-pandemic inflation. So at a certain point, consumers are going to have to make some tough decisions, and we know that some might be doing that during the holidays. And a rising share of people are thinking about tapping their credit cards for holiday spending.
And before I let you go, what does this look like if you're the retailers on the other side, right? You got through the big tranche of tariff, trade policy related uncertainty all year. You're trying to do the right thing in terms of inventory and pricing levels for Q4, but that's much easier said than it is done.
Yeah, what I hear from businesses and what I also want to kind of communicate to everyday people is that it is not the year to really put off your holiday shopping. Inventories that we saw last year, which really helped Americans see those massive discounts all the way leading up to the end of the year, they might not happen this year, especially if Americans shop just as much as we're expecting them to. So price check, comparison shop, do your shopping early. If you see a good deal, snag it while you can.
I feel so much better prepared for the Thanksgiving holiday having spoken with you. Sarah Foster, economic analyst at Bankrate, longtime friend of ours here at the New York Stock Exchange. Thanks for being here. It's great to have you.
Thanks for having me, JD.
Enjoy your Turkey Day, folks. Don't go anywhere. Much more Taking Stock coming up after this quick break. Welcome back to the show. At this time, we do have some sad news to share from our community here at the New York Stock Exchange. Cassandra Sire, the NYSE's head of international capital markets and a strong advocate for women in finance, passed away suddenly over this past weekend. Cassandra was not only a colleague, but a dear friend to many of us here in this tremendous community of the New York Stock Exchange. Unsurprisingly, tributes have been pouring in from friends of the community all over the world. The people who worked with Cassandra every day here on Wall Street, her colleagues, put together this tribute to remember her.
We have some sad news to report from the NYSE. This past weekend, Cassandra Sire, the New York Stock Exchange's head of international capital markets, suddenly and tragically passed away. Cassandra joined the New York Stock Exchange in 2022 after a distinguished career at Goldman Sachs. Cassandra embodied everything that makes the NYSE great: a tireless defense of the principles she believed in, and a fierce champion of every single customer she touched. She had endless energy and was laser-focused on getting the job done. And she also found time to offer anyone support and to mentor the next generation of leaders. Our thoughts are with Cassandra's family during this difficult time. As NYSE President Lynn Martin said, those of us who knew Cassandra are far better because of it.
Welcome back to the broadcast. You're watching Taking Stock on this Thanksgiving Eve live from the trading floor of the New York Stock Exchange. And joining me now is both Shieldy of the Salvation Army and say hello to Major Philip Wittenberg of the Salvation Army as well. Just rang the closing bell. Welcome to you and your team. It's really great to have you on the show today, Philip.
Well, we're honored to be here, and it was an exciting moment, ringing the bell the night before Thanksgiving. So what an honor.
I said this at the top of the broadcast. It's one of our favorite traditions here during the Thanksgiving season. Talk to me first and foremost about not just the bell ringing experience, but really what this means here at the New York Stock Exchange for the incredible team and the work you do at the Salvation Army.
I think this is really a beautiful call to action the night before Thanksgiving to ring the bell, the New York Stock Exchange, to remind everyone that this is the season of Thanksgiving and grace and giving, and almost a call to action to call and to reinvigorate the generosity of the American people. So perfect timing.
Can you talk to me about a few of the ways that the Salvation Army, of the many ways, supports New Yorkers in particular during this holiday season?
Well, let me give you a personal example. Before I took the subway over here today, I was in Astoria, Queens, where we have our place, and we had handed out 200 Thanksgiving meals on the street. Lines going around the corner, very personal, very beautiful. Hop on the subway, come here, closing bell for the stock exchange. So all over New York metro area, all over this country, thousands upon thousands of Thanksgiving meals have been handed out just in the last few days. Just as one example of what we're doing.
That's incredible work that you and the team at Salvation Army do, all the volunteers as well. Talk to me about the role of corporate partnerships and others that are really crucial to making sure that the good faith work you want to do can actually help get executed at scale for the people and communities who really most need it.
Yeah, that is 100% crucial. Like everyone not-for-profit doing what we do, we're facing increasing challenges about how we raise money, right? Mail appeal is what it is. Even our famous red kettles in a cashless society, right? Where it used to be dollars, nickels, pennies were going in that red kettle. That's not so much anymore. So how do you transition that into something? So we are always on the lookout for strong corporate partners to help us reinvent our fundraising and give generosity towards the Salvation Army and the work we've done in New York since the 1880s and around the country.
Yeah, of course, we always see those great red kettles reminded on Thanksgiving Day football games in the end zones down there in Arlington and other great stadiums. Before I let you go and then send you and the team all the best for the Thanksgiving season, what can people do if they want to support more during this holiday?
You can go to salvationarmyusa.org, salvationarmyusa.org, to see all the ways you can give and volunteer year-round, but especially at Christmas and the days after Thanksgiving. And we just want to say thank you to the public for the generosity over 130 years.
Major Philip Wittenberg of the Salvation Army, with a little help from Shieldy here, of course, for the holiday season. All the best for Thanksgiving. Thank you so much for joining us.
Bless you. Happy Thanksgiving.
Don't go anywhere. Much more Taking Stock coming up after a quick break, including the latest from Money 2020's Scarlett Sieber. More Taking Stock after this.
Welcome back. I'm Scarlett Seaver with Money 2020, and on this segment of how fintech companies actually make money, we're going to be spotlighting Snowflake, the company that made data sexy and profitable. To put it simply, Snowflake is the cloud that prints money. Snowflake didn't invent cloud computing, to be clear. That was Amazon, Microsoft, and Google. But Snowflake did do something sneakier. They made it usable. They built a platform where companies could store, analyze, and share data across clouds without needing a PhD in distributed systems. They launched in 2012, IPO'd in 2020, right here at the NYSE, with the biggest software debut ever, by the way, and now they are the backbone of data infrastructure for banks, fintechs, retailers, and even government agencies. If data is the new oil, Snowflake is the refinery, people. Their tagline, mobilize your data. Translation, we'll store your data, we'll analyze it, and charge you every time that you touch it. So let's get to the breakdown of how that company actually makes money, shall we? First of all, consumer-based pricing, consumption-based pricing. Snowflake doesn't just do flat fees. That's not what they're into. You pay for what you use. Storage, compute, data transfer. It's like a data vending machine. Swipe your card, crunch your numbers, pay the tab. And the more you crunch, the more they earn. Professional services. Need help setting up your data warehouse? Snowflake's got consultants for that. And yes, of course they bill you for it. Think of it like the IKEA model. You know the Swede in me loves some IKEA. Buy that furniture, then pay someone to assemble it. The Snowflake Marketplace. Want third-party data? Buy it on Snowflake's Marketplace. They take a cut of every one of those transactions. It's Amazon for analytics, and Snowflake is the landlord in this case. Snowpark, which is their developer tools. Developers can build custom data apps inside Snowflakes. It's like renting a workshop inside the cloud. And yes, there is a fee, because even in the cloud, real estate isn't exactly free. They also have some interesting strategic partnerships. Snowflake does play nice with AWS, Azure, and Google Cloud. These integrations make it easier to onboard and harder to leave once you're in. It is the velvet handcuffs of cloud computing. Snowflake has turned data into dollars by making it easy to store, slice, and share. But remember, every query, every byte, every click, that's another snowflake in their revenue avalanche. So next time someone says data is the future, just know Snowflake is already cashing in, and they're going to be doing it 1 terabyte at a time. All right, that's all for today, folks. Until next time, back over to you.
And on this, the day before Thanksgiving, the major market indexes finishing for the tail of the tape in positive territory. The S&P 500 and the Dow finishing up 0.7%, with the small caps up 0.8%. The Bitcoin and the crypto majors rallying up. Bitcoin currently up 3% on the day. It all sets the stage for next week here on Wall Street. We'll get ADP and jobless claims on Wednesday, earnings from Macy's, Dollar Tree, Salesforce, and Snowflake for some of the AI trade. On Thursday, Kroger and Ulta Beauty. That's going to do it for the entire team here at Taking Stock. Have a wonderful Thanksgiving. I am so grateful to each and every one of you, and to them. Have a good weekend. We'll see you Monday. Woo!